Chairman of the branch and office bearers, and my dear friends. I thank the branch for giving me this opportunity. It's always a pleasure to participate in the institute meetings and share my thoughts. It's always been a learning exercise also for me, I would say, this trainers, because the time we spend on doing preparation is definitely a revisit into what all we have learned, and I thank the branch for that, and it's my pleasure to be here. The topic for the day is section 143.3 to 148. I would slightly rephrase it as assessments and reassessment. And within assessment and reassessment, more particularly, I think we will look at phaseless assessments and the reassessment. Section two broad topics we will deal with today. I think both of them are very topical and very relevant today for more than one reason. The assessments for 2021 are ongoing. The phaseless assessments have been there for a year, and they have gone through the issues in the phaseless assessment, and the government has responded. So therefore, the whole gamut of assessments is a very topical for us to deal with. Similarly, reassessments also, the whole law of reassessments are undergone a paradigm shift. It's not mere amendments, it's a paradigm shift as far as reassessments are concerned, and therefore it's necessary for us to understand the concept of reassessment as it is today. And all of us are going to the reassessments and assessments, which are all due in December in the time frame. So therefore, I think it's good that we are getting into a very practical and a very relevant topic. Once again, I thank the branch for choosing a very, very relevant topic. I've just made one caveat before getting into the technical issues, is that both these topics are procedural in nature. Reassessment is largely procedural law. There is some substantive law, but the amendments which have been made have made it more of a procedural law, because I deal with it again, the total environment in which the government is moving has made everything a kind of centralized rule, and therefore both the topics assessment are procedural in nature, not much substantive, and therefore I may not be giving any specific examples, because the way the whole process has been laid down, it works across all industries, it works across all assessees equally. And therefore, I may not be giving any specific examples in these two areas, but I will deal with them if there are any questions which are industry specific or which are any particular fact specific. But broadly, I think it's procedural law, and therefore bear with me if it is a little bit more process oriented, because the broader message is that is where we are all getting into. The whole ecosystem which is now being brought by the government is to make everything automatic, remove the discretion from the assessing officer, remove the discretion also from the professionals in it. Because all these years we were used to taking interpretations, taking different points of view. Now I'm getting afraid that that kind of freedom which we had is getting lost the way the assessment process is being laid. I will elaborate as we go on. So therefore, I will deal with both the procedure and the process by which these assessments are made. And another point before I really get into the technical aspects of the two broad topics is that why is it necessary for us to understand the process? Because most of the time we think you open the e-portal, the notice comes, I can reply. Why should we really know what happens behind the e-portal and within the income tax department? Because most of the processes what we are going to discuss in the phaseless assessment scheme is about the process which happens within the department. Why should I know about it? It's a question. I would be happy just to answer the questions, and I should know what I should do with my laptop and with my e-portal. But that's not the correct approach, because it's very, very important to know what happens with the return filed by you and what happens within the department, how technologically they are advanced today, how professionally they are advanced today, and I would dare say that how much technologically and professionally we are lagging behind. I think we need to understand that that is why the process of what happens is relevant. Now, one more point is that both the law relating to assessment, the faceless assessment, as I said, I will deal only with faceless assessment and the reopening, and if there are any other issues in these other sections, I will deal with them. But I think we'll have sufficient time only to deal with these two broad aspects, which are very important. Now, both the aspects, faceless assessment as well as reopening of assessments, the change in law has been really been made with effect from 1/4/2021. But then why are we discussing today is the reason that Finance Act 2022 again made wholesale changes to both the systems. The government reacted so fast. When the faceless was introduced in 2021, there were so many hiccups, there were so many points of view, and there were so many criticisms. Many petitions filed where courts have even quashed the faceless orders passed, mostly on the principle of natural justice and also on non-compliance to the faceless assessment scheme. So the government took note of all these responses, and so fast it has come back in Finance Act 2022. They come with so many amendments that it has become totally new law. That is the reason I'm saying that revisiting the topic of assessment, faceless assessment under section 143, 144B, and the concept of reassessment is essential because the Finance Act 2022 is a watershed as far as these two areas are concerned. And you will be surprised to know that many of the things what we have learned in the earlier period, including by Finance Act 2021, has become history now, and we need to really start a fresh understanding of these two concepts. With these few preliminary remarks, I will get into the discussion of the assessments. The first is, as I said, faceless assessment. All of us know now that the government has moved into faceless assessment scheme. Just to give a few background of the faceless assessment scheme before we get into the current scheme is that the whole idea started in 2018. And the government wanted to remove discretionary approach, use technology, and also make the functioning of the department efficient. So therefore, section 143(3)(a) and 3(b) were introduced in 2018, provided that the interface between the assessing officer and the assessee should be reduced to the extent possible technologically. These are the three broad objectives which are still holding good. Second is optimal utilization of the resources through economy of scale and functional specialization. Before 2018, I think the department was working based on jurisdiction assessment officer concept, where every officer used to do multiple functions. Now, after 2018, the department has slowly moved into functional specialization. That's why now you have seen in the last 4 years, every area of transfer pricing, within transfer pricing, different areas, international tax, TDS, every aspect of that has been specialized, and officers are being groomed and given specific functional knowledge, all the necessary inputs, material to understand the functional specialization. So this is the second aim. And third is to do a team-based assessment. Instead of doing assessments in the hands of individual officers, it should be a team-based approach, meaning that within a unit there will be a team of officers who will interactively, interdependently work on the assessment so that the collective wisdom of a team and the collective discretion of a team comes out rather than a single officer. And dynamic jurisdiction. Instead of the jurisdiction being tied down to one particular physical officer, it's a dynamic, random allocation of the assessment jurisdiction. Now, these three broad principles were laid down in 2018 under section 143(3)(a) and 3(b), and the faceless scheme was launched. And all of us may be remembering the faceless assessment scheme was launched on 13th August 2020 by the Prime Minister through a portal called Shala with the Honest. Now, just to go through a few slides in the past and then speed up on our technical knowledge. I guess most of you would have seen this campaign ad of the department, Honor in the Honest. And this brings out the real understanding of the department or real intention of the department is, in a faceless assessment, they want to ensure ease of compliance for the taxpayers. I think we have all been party to that various measures rolled down by the department. I will not get into all of them, be it e-portal or making every compliance through portal, making all the forms online, electronic forms, removing physical meetings, ensuring that every correspondence is done through the e-portal and DIN number is given. I think several initiatives have been done to make the ease of compliance, no human interface, transparency and efficiency, because now every document gets tracked by way of a DIN number, and therefore the question of and everything gets through proper approval mechanism. Functional specialization is earlier, improvement in quality of assessments. This is an area on which Tesla has really concentrated, because the assessments are getting more uniform and with a standardized approach. I will deal with it a little later in elaborately. And expeditious disposal of appeals. I think the time limits for completion of assessments have been gradually reduced from 3 years now. It has come down to 9 months from the end of the assessment date. That is, within 21 months of the end of the accounting year, the assessments have to be completed. I think doing an assessment within 9 months from the end of the assessment date is really a very, very welcome move, because it gives certainty to everybody. I think these were the core principles of the scheme. And the other campaign which you would have seen is that selection only through system using data analytics and AI. So the selection of cases for scrutiny will be only through automated tools and using artificial intelligence. I think you would have heard of the Insight portal, where a lot of data is collected and then real intelligence is put into the selection of cases rather than mere going by the percentage of turnover or percentage of expenditure or such numerical basis. Abolition of territorial jurisdiction, I think I will not just repeat them, they are all there. Now, just to give an idea of what was the position, this again a campaign given by the department. I'm just borrowing from the department slide. You can see all the dots that the faceless centers are all across the country, and the work is spread over them, and anybody can do any assessment because of the dynamic jurisdiction. Now, with this small background of what was the initiation of the faceless assessment, now let us understand what has happened after 2021, the first year when the faceless assessment scheme was put in. As I said earlier, it faced a lot of challenges: legal, technical, administrative, all kinds of challenges. Administratively, the challenges were that the department did not have enough hardware and technical people to deal with the kind of volume of work which flows into the faceless system. And the outsourcing given to Infosys did not really take up very well. And so those problems have been fully addressed. I will not get into that. I will only concentrate on legal. Just I want to mention a lot of the issues. Administratively, they had a lot of issues because moving the whole manpower of the department, 2/3 of the manpower of the department, from a physical assessment system to a faceless assessment was a big task. The mindset of the officers have to be changed. That was a big challenge. And there was also a specific problem that the review of one assessment by another officer was giving a big challenge. In fact, this was one of the biggest challenges which was there in the earlier scheme, which has been addressed now. That the officers of the department were never used to getting reviewed of their work. Whenever they do assessment, legally they are tasked with the assessment, and then therefore they always enjoy the full freedom. But under the faceless system, because of transparency, the work of one unit was being reviewed by another unit, which was a big challenge, which has also been addressed now. You will see how it has been addressed. Now, all these issues, legal issues, there were a lot of legal issues. One of the main legal issues is about lack of personal hearing. Because the scheme as it was rolled out in 2021, there was no provision for a personal hearing in the course of the assessment. In fact, at the end of 2021 working season, the department put in a software where, and a rule where they said, if you ask for a personal hearing, it will be given, but at the discretion of the commissioner. And it was not given in many cases, it was given in very few cases. And most of the assessments were made without personal hearing. And being the first year of faceless scheme, the department was also not tuned to the actual process which was scheduled under the faceless scheme, and therefore there were many places where the scheme was not in strict adherence to the scheme. Now, many writ petitions have been filed, and almost, I would say in almost all the cases, the courts have found that not giving personal hearing is not acceptable under the income tax system. Because courts have said natural justice is a salutary principle, and it's a basic principle which is ingrained into the whole process of assessment, and no legislation, directly or indirectly, can take away the process of personal hearing. And therefore, they struck down many assessments. In some cases, they said they will be sent back to the assessing officer to be given a fresh opportunity. In some cases, in fact, the Bombay High Court very repeatedly said, they warned the officers, and after quite a time, they started quashing the assessment orders passed without giving the personal hearing. So these problems have all been addressed now in the present system. So therefore, moving forward, which is the topic of interest for us, is that taking into account all these problems, technical, legal, administrative, and all kinds of problems which have been faced in the faceless assessment scheme in the first year of its rollout, 21-22 financial year, when it was first rolled out in full scale, the government has responded quickly. They have taken the inputs from every stakeholder, whether it is the assessee, whether it is the taxpayer, the authorized representatives, the institute's recommendations, the various views given by the judiciary, the views of the department staff, the officers, every stakeholder's view has been taken into account, and you will be surprised that very quickly in Finance Act 2022, the whole faceless scheme has been now replaced by a new section 144B. Earlier also it was under 144B, but now the new 144B has addressed all these issues. So I would just want to, at the cost of repetition, want to make one point that the Finance Act 2022 and the new section 144B, which has been introduced, which is what we will see, is a watershed. Why I'm saying that is the entire scheme notifications, the various circulars which have been given so far are rescinded, they are superseded. So if you want to understand the subject of faceless from 1/4/2022, as is going to be applicable for the current year, please don't do Google. Because if you Google, you will get all last in stuff. They're all redundant, superfluous. What all you need to see is new section 144B from the Income Tax Act Direct. Nothing else matters because, as I said, why I elaborated the whole background is for you to get a sense that it's not a mere amendment, unlike the earlier systems. All issues have been addressed, and a very simplified, straightforward process has been put under 144B. In fact, when I go through that, you will find it very simple, very straightforward, and therefore, all the earlier notifications or any of the structures, what you will see, or any of the graphs you will see, all of them will not be relevant. If you do Google, you will get a lot of process flows. All of them are irrelevant today. Please look at only 144B, which is the new section. So I will take you through that 144B very shortly. In addition to the new section 144B, there are 5 basic notifications which have been given. And I'm just giving the notification reference. You can make a reference to that. I will not elaborate on that. What it broadly means is that the faceless inquiry jurisdiction under 120 of the Income Tax Act has been now allocated to all the officers afresh. As I said, the earlier allocations, the earlier problems, interlimit issues, everything has been addressed, and therefore, notification 61 of 2021 dated 10th June 2022 gives a fresh allocation. So this is how the new system within the department will work. So they have also given directions for implementation of the scheme. A fresh directions have been given to the department. So as far as the assessors are concerned, faceless inquiry and valuation scheme has been brought in, meaning that even the inquiries which are to be conducted under the Income Tax Act now will be only through faceless system. Income escaping assessment has been brought under faceless. Earlier it was not there. Now with this e-assessment income escaping scheme 2022, all the assessments have been brought under the faceless. Whether it is 143.3, 141 judgment assessment or reopened assessment, all assessments have been brought into the faceless scheme. faceless jurisdictional income tax authorities are the notified. So therefore, what all we need to understand going forward is 144B as amended by Finance Act 2022 and these 5 notifications. Now, what we need to really understand is the process of how the whole flow of information in the department works between the department and SSC. As I said, it's a procedural law, imbibing all the rights to the assessees in the process itself. And before I get into that, I thought we'll also deal with one more aspect of what are the excluded cases in the faceless assessment scheme. Little while ago, I said every assessment is covered, 143, 144, and 147. But 3 exceptions have been made from the faceless assessment scheme. First is the assessments which are assigned to central circle. So any raid case automatically gets assigned to central circle. Any survey case gets assigned to the central circle, as we know. So the central circle assessments will continue to be in physical mode only. Similarly, assessment of cases assigned to international tax charge, because of the complexity of the subject, will continue to be in physical mode. Third is the board is empowered under section 119 to specify cases from time to time. And one such notification which has been given is assessment orders in case where pendency could not be created under ITBA. There are some technical problems where some of the cases could not be loaded onto the ITBA portal, income tax portal. And there are also cases where the assessee is not having a tandem. Like for example, it comes under the process of survey or in the process of information gathering under section 135. There are several means by which the department can catch fresh assessees who are not having PAN. Until such time they have PAN, assessments cannot be stopped. So therefore, these 2 categories of cases, which are purely administrative categories, they will also remain outside the faceless jurisdiction. So essentially, central circle and international tax will remain outside the faceless scheme. I will also deal with one more aspect before getting into the process, is that is there any way to get out of the faceless scheme? Once an assessee is transferred to a faceless scheme and assessments are launched under a faceless scheme, are there any scope for getting out of the scheme? So the Act provides 2 specific cases where an assessment which is already under the faceless scheme will get out of the faceless scheme. First one is under 144B8, the Principal Commissioner or the DG in charge at the National Faceless Assessment Center can, if he considers it appropriate, with the prior approval of the board, can transfer it out. So this is basically to ensure that large cases or any cases which requires a much more detailed investigation, maybe it requires multi-location verification or any specific such cases, the PCI in charge of the National Faceless Assessment Center can recommend, but again, prior approval of the board is required. So therefore, it's a very stringent mechanism that it's not easy for somebody to jump out of the faceless scheme, but in appropriate cases, with board approval, it can be done. The second category, which is also exempted, is that during the course of faceless assessment, there could be a situation that the assessing officer, the assessing unit, finds it necessary that the case has to be referred for special audit under section 142 of the Income Tax Act, 142(2)(a). So when it's to be referred to a special audit, then in those cases, the Principal Commissioner of NFAC will make a recommendation to the Jurisdictional Commissioner, and then the case will be transferred to the Jurisdictional Assessing Officer. Special audit will be done, physical mode, and the assessment also will be completed in the specific. So these are the 2 cases, 2 instances where the assessments which are already part of the faceless assessment can go out of the faceless scheme. And again, as I said in the earlier cases, if a case is already in faceless scheme and if there is a search and seizure operation in that case, those cases also automatically, once they are centralized, they will come out of the faceless and they will get into the schemes. One more residual area to understand the faceless scheme before I think the process is that what are the functions allotted to JA? What are the broad distinction between the faceless unit and jurisdictional assessment? Here we need to understand one simple concept, that the concept of jurisdictional assessing officer is not abolished. It's now what is called between faceless and jurisdictional assessing officer is a concurrent jurisdiction. It is not that faceless assessing officer becomes the full officer. He is a concurrent officer. So both the jurisdictional assessing officer and faceless assessment hold concurrent charge. Out of this concurrent charge, to the extent of assessments, only assessments have been given to the faceless units. The rest of the functions will be done by the jurisdictional assessing officer. The earlier system was that based upon territorial allocation, one assessing officer was in charge of all the functions. Now it has been made to concurrent jurisdiction. So the concept of concurrent jurisdiction is very important because then it helps to move more and more functions from the jurisdictional assessing officer to the faceless units. The whole idea of the department and the government is that progressively more and more areas should be transferred into facial assessment scheme. In fact, I would like to mention one more amendment which I have not put on the slide, which is very important, is that the Taxation Amendment Act 2021 very specifically amended at least 10-15 sections like valuation, verification, TDS. I mean, every conceivable area of the income tax process has been amended to say that at the appropriate time they will all be moved to faceless. So already the government has given out the roadmap that most of these functions will be moved into the faceless system, and mechanisms are coming in place. So pending that, concurrent jurisdiction concept has been adopted. So therefore, under the present dispensation, under the as of today, the assessment unit, faceless assessment unit, will do the assessments, only assessments, and rest of the functions like taxpayer outreach, taxpayer facilitation, rectification, grievance handling, demand management, that's tax recovery, collection recovery, audit functions, judicial functions, that is filing appeals and responding to the writ petitions filed by the assessee, filing appeals in tribunal, all those judicial functions. Statutory powers under section 262, meaning still 263 and 264 is still under physical mode only. Prosecution, administrative matters, and case records, all of them will be with the judicial officer. Therefore, practically on the ground, for these matters, we have to approach the local physical infrastructure of the JAO. But again, the board has also said these functions also will be done to the extent feasible, to the extent possible, only through electronic mode. Because the concept of electronic mode is given for the government. They want to move totally into the electronic mode. Though it is said it is jurisdictional assessing officer, it is not that all of them will be physical, that we allow the facility to go and sit with the officer and get done whatever we need to get done. Most of the specifics, like for example, rectification is already on E mode, grievance handling is on E mode, collection recovery of course still continues to be in physical mode. So most of these functions will be progressively moved out to the, at the first stage to the electronic mode and then ultimately to the faceless assessment. So therefore, this gives us a broad idea of how the faceless system is going to work. Now let me get into the faceless unit itself. As I said in the beginning, we need to understand what exactly happens within the faceless assessment unit, or I would call faceless assessment center, NFC, as it is called. Just to give a comparison, I don't want to go to the earlier comparison, it will be unnecessarily confusing. But just to, that is the terminology earlier used to call regional assessment centers, etc., etc. All of them have been abolished. Now there's only one common name for the faceless. It's called National Faceless Assessment Center. It is conducted by a very senior principal commissioner of income tax and PG. So they function. Now let's understand what are the different units which are there and how they work and what do they do. So it gives an idea for us, as I said, as to the data which is filed by us in terms of return of income or in terms of the employees. What happens we can understand, and that will also help us to respond on the notices when they come. Now there are broadly 5 units of them. There is an assessment unit, there is a verification unit, there is a technical unit, there is a review unit, and above all, on top of it, the National Faceless Assessment Center. National Faceless Assessment Center, as we know, is the front end which interacts between the other 4 units and the assessment. So the taxpayer is on the one side, the 4 units which do the assessment is on the one side, and National Faceless Center is in the middle, coordinating between them, and any communication between the right side and left side, the right side taxpayer and the left side the 4 units, will be through National Faceless Assessment Center. The law has been made clear after 2022 that any communication will be only through electronic mode, and every communication has to have a PIN number, and most importantly, which was not there in 2021, now 2020 has been made mandatory, that every communication has to have a digital signature. So in the case of National Faceless Assessment Center, it will be the digital signature of the center. In the case of these other units, so that means we are getting a notice from a verification unit, the digital signature of the particular unit will be. So therefore, in terms of process development, ensure that it's a tight situation where there cannot be any possibilities of misuse by any of the participants of the system. Now, what are these 4 units? Assessment unit will broadly do assessment. I'll get into the details also later, but first, broadly, assessment unit will do only assessment. Meaning that, what are they going to do? Let us see. They will, on the functions we see, to perform the function of making the assessment, which means identification of the points and issues material for determination of any liability, seeking information or clarification, analysis of the material, and such as function. So therefore, basically, they can do only 3 things. The assessment unit. They will identify what are the issues. They will have all the data, they will have the return file there, they will have all the data. They will identify the issues which are to be raised. They will analyze the data given to them, and they can seek information and clarifications. That's all the assessment unit which sits in any of the dynamic jurisdictions can do. Now, this is compartmentalization of work. Earlier, the thing officer used to do everything. Now, go to the next one, verification unit. Suppose in the process of collecting information, there is a case for verification. Then the assessing unit cannot do the verification. The assessing unit can do only raising of questions and collecting information analysis. Now, verification unit, what can they do? To perform the function of verification, which includes inquiry, cross-verification, examination of books of accounts, witnesses, recording statements, and such other statement as produced. So the verification, which means that if a witness has to be examined, if a creditor has to be examined, or if the third-party statement has to be recorded, any sort of verification will be done only by the verification. This is what they are calling functional specialization. So the verification unit will have all the wherewithal to do the verification, and they will do only verification, and they will not do assessment. Examination of books of accounts, they will only do. Statement recording, they will only do. Again, all these processes will be done only through electronic mode. Verification unit also will be faceless. They will do recording of statements through video conferencing only. Let us understand that there is no question of any physical hearing. Even a statement, if it is to be recorded, a cross-examination which is to be done, or any of the verification processes will be done only through electronic. If a creditor has to be verified also, the verification unit will send a notice to the creditor and call for the information collected. And the physical verification, wherever it is required, can be done, again in the next proviso, can be done with appropriate approvals of the principal commission level. So it's not in every case physical verification is done. There has to be justification why a physical verification is required, and board has identified certain cases like there are 3 notices sent to an assessee, and the assessee is not responding to any of them. Then they said it could be a fit case to do a physical verification. In fact, please don't do that. Don't take any adjournments in any of the notices, because unlike earlier, while adjournment has been given, it's not a matter of right. Every adjournment adds to the degree of your suspicion. First adjournment, second adjournment, third adjournment, it will invite a different kind of action. So therefore, that's why I said we need to understand the process. So before the notices come, before the assessment comes, you need to have the entire income tax information dossier. We all know what all they asked for, have the dossier, and ensure that they are all filed without any adjournment. Otherwise, it will initiate verification, physical verification. Whatever level of verification. Now, technically, this is very important. You can understand the depth of the working of the department. Technical unit, what is the technical unit? It will perform technical assistance, including any assistance or advice on legal, accounting, forensic, information technology, valuation, transfer pricing, data analytics, management, or any other technical matter, or agreements entered into 1998, which may be recorded in a case. So, the assessing officer, now please imagine, he cannot do verification. He cannot do any interpretation. He cannot take a legal interpretation whether section 131 has to be read like this, whether this particular word applies this. None of this interpretation can be done by us. He is more like a front-end postman who will only raise questions, collect information, and then of course pass the order. So, how many technical units are there? You can imagine legal, accounting, forensic, information technology, valuation, data analytics, management, international tax. So, department has formed separate functional teams who are well equipped in their respective functional knowledge, domain knowledge, and therefore if there are any issues which require application of this knowledge, it will be sent to those students. So these technical units are available in different centers. Of course, they're not necessary that every assessment unit should have one technical unit. It depends on the workload. But the broader point I want you to understand is that the whole functioning of the department is no professionalism. Second and most important, it is standardized and uniform. Earlier, we used to have this joke also. You go to one officer in compartment 1 or floor 1 who knows you, you can make an interpretation and convince him and get the case done. The second floor, if you go to another officer who is hostile, the same facts, the same section, he will not be convinced. He will take a different view. This is what was happening because there were diversity of views, multiple views, and in appeals, in different assessment years, getting different verdicts for the same issue, for the same assessment, so all kinds of things are happening. Now, once it is functionally specialized and there are teams, and they are having a uniform, I'll just give a practical example also here. They also have a particular view. It is going to be applied uniformly across. So therefore, it is necessary for us, not as practitioners, to do our own interpretation of a section and then say, I am convinced with this interpretation, I advise the client, I will go with it. It is no more important for us to know what is the standard interpretation which the department is taking and align with it. We may agree with that, we may not agree with that. But we have to align with that and be sensitive to that because the department is going to implement it uniformly across all cases. You may interpret, but you will end up in litigation. I am not saying you should not interpret, but then once you understand the department's approach on any particular issue, which is uniform, either we will change our view and align it so that we avoid litigation, or if we are having litigation, we will tell the client in advance this is going to be litigation. I'll just give one small example for us to understand this and move forward. Is the issue of, I think, very uncomplicated issue I'll take. So that there are many, almost every functional issue, department has got a view to it. I have interacted with the department at highest levels. In fact, they've taken input on many of the technical matters. I'm surprised at the level of FAQs they have developed for each of the issues which comes in assessments. So I will get into those complexity. I'll just give a very simple example which many of us will come across in the press. The companies have to do CSR expenditure, which is mandated under the Companies Act. Last year, what has happened is because of pandemic and other problems, many companies could not use the money for CSR expenditure, and therefore there was an issue. What happens? So the company law board gave a clarification saying that, and at the same time, the Prime Minister came out with a scheme called PM Cares Fund. So a clarification was given by the company law department that any contribution by the assessee to PM Cares Fund will be treated as a compliance of the CSR expenditure under 133(5) of the Companies Act. The PM Cares Fund is also eligible for Section 80G deduction. It's a registered trust under 80G, it's also eligible for 80G deduction. Now, this issue is now complete assessment. Many of the people have made the contribution to, many companies have made the contribution to PM Cares Fund and they claim deduction as an 80G. Now, issues arising, is it allowable as a deduction 80G? Because CSR expenditure is a mandatory expenditure. It is disallowable under the Income Tax Act. Section 37 specifically disallows it. Can you claim 80G? So there are also counter-argument to say that since it is disallowed, it's only forming part of my total income and therefore I'm eligible. So there are arguments and counter-arguments. But what I want to point out is, this issue quickly has gone to the notice of the technical unit. And they have taken a view. And the view is this. They said the PM Cares Fund portal does not say that CSR expenditure is eligible for 80G. There are two different statements. One statement is that contribution to PM Cares Fund is treated as utilization of the Companies Act. That's line number 1 in the portal. There is another line which says 80G, subject to the contribution will be eligible for deduction subject to 80G, subject to the condition of 80G. So therefore they say it's not mandatory that CSR contribution will be eligible. Conditions of 80G should be complied. And 80G, what does it say? 80G says any contribution as donation. No, donation means what? Donation means voluntary. This is involuntary and therefore it cannot be eligible. So this is the view. Right or wrong is a different issue. I'm saying, all I'm trying to point out is, no, this is a view taken by the technical wing or the technical unit. Now all the technical units are adopting it. And how many of you have got? Many people have got the notice. And whatever you reply, the response of the assessing officer is going to be C. And therefore I'm saying, we need to interact more with the department and technical, not only seminars and ourselves, we need to interact with the department, get the technical viewpoints of the departments, and debate, align or litigate, but we should be more aware so that we will be more prepared to answer this kind of notice. Therefore, technical unit is the most powerful engine in the whole faceless system. It's so specialized, departmentalized, and young officers are being put and given a lot of training with our technical material, and therefore, my interaction with them, I would say, forgive me for saying this, is that the technical units are much more advanced in professional knowledge than many of our charter opponents. I don't mean anything wrong, but please take it in the right sense that we need to really catch up with the kind of reading and technical knowledge department is having. So now moving on to review units. This is another powerful section of the faceless engine. Is that one officer makes an assessment, and then the National Faceless Assessment Center, which is at the top, finds it that it is not in consonance to the, what they call, there's a term which they call risk management strategy of the board. Risk management strategy of the board means that there are two things which they are going to use. One is the policy of the board, and second is automatic tools. That's what NFC will do. The policy of the government risk management strategies at the board level, at the government level, they form all what are the risks which are to attack. Basically, to ensure black money and evasion is not there, what are to attack? Do we attack shell companies? How do we identify shell companies? Do we attract foreign transactions? Do we attract transactions in travel? In each industry, what are the areas where the unaccounted money could be existing? Real estate, what are the kind of transactions which are subject to? So they specialize, they understand, and they formulated which are the risk areas. Instead of doing a blind assessment, instead of doing an assessment as per the individual knowledge and talent of an officer at a different level, now at a board level, the entire information is collected and they have a vision now that these are the risk points which will have to be evaluated. So this is one set of information which is with the National NFC, National Faceless Assessment Center, which is at the top of this whole scheme. Second is automated tools. This is all provided in the Act, and automated tool means, it is defined in the Act to mean artificial information and any other data analytics and any other tools required for. So they are employing, so with the information available, they are going to apply the policy and the tools and come out with a view that a particular assessment order made by a particular officer is okay, not okay in the light of these things. So if they find it is not okay, it could be that the assessing officer has missed some of the risk points. It is possible that some of the data has not been properly understood by him. Like for example, it could be a case where there are, let us say, this entry transactions in a case. The particular officer may not be able to spot the entry transaction. When the analytical tools are run, like for example, this particular party has done giving loans and taking loans with a Calcutta party 10 times. The assessing officer may not be able to spot it. But whereas the analytical tool will spot that by the name of the Calcutta party that it is an entry provider. And they also have the backup that the information done by the Director of Investigation wing will also be available. So the whole information is available. So basing upon that, reviews to be done. Or it could be a legal issue. That the board has taken a standard view of some of the legal issues as I explained earlier. Therefore, it requires review. So for any of these reasons, again, not frivolous reasons, not discretionary reasons, not whims and fancies of NFC. Two important tests have been put that one, it has to be based on this strategy, and second, automated tools, and the data available to the department. So if they find, then they can say that it has to be reviewed. They can send to another review unit, which is also an assessment unit, but they will review the whole work done by assessment unit 1 or officer 1, and they will come with their recommendations. So that is, review unit will do the, which includes checking whether the relevant material has been brought on record. What all the review unit will do is to perform the function of review of the income determination, which includes checking whether relevant material has been brought on record, relevant points of facts and law have been duly incorporated, issues with additional disallowance have been incorporated, and such other functions and which are the job actions. So they will do a review, they will give a review. Now, once the review unit gives a report, so these are the 4 units of the faceless system and how they work. Now, once the review unit gives a report, once the review unit gives the report, the NFC will consider it and they will send it back to the assessment unit, which has done the assessment. The assessment unit will consider those points. They may agree, they may not agree with the review unit. And if they don't agree, they are allowed to what they call reject the recommendations of the review unit, then they have to record the reasons, and then they will make the assessment of that. Now, one important point I want to mention here is that in the earlier scale, when the assessment was sent to a review unit, and review unit came with recommendations, negative recommendations, the system in 2020-21 was that the assessment would be now referred to third assessment unit, meaning A assessment unit has made the original assessment, it was reviewed by review unit, and they came with recommendations. Now instead of giving it to A, again, the assessment is now sent to B unit. This was thought to be a kind of balancing by the departments, and that was done in 2021, but it met with huge resistance from the departmental officers because it is almost like assigning the integrity and efficiency of the particular officer. Because there can be difference of view, there can be difference of hoping, but you cannot take away the work. No individual self-respective themselves. Right? And board has recognized it, and therefore in the present scheme, all of them has been done away with. It will go with the same system. So therefore, after the review is done, it will go to the same assessment unit, it will do that. Now, the process of assessment, I think I've given the whole process here. I'll quickly run through it because I guess I have another half an hour I need to deal with reassessments also. I'll just quickly go through this. Now, the process of this assessment will be, first this case will be taken for faceless assessment and a notice will be issued. And then once the notice is issued, it will be referred to the assessment unit. As I explained, assessment unit will do, and it can refer to verification unit or technical unit. I'll skip this also, I think I'll explain this. I'll just concentrate on the opportunity for restriction. Once 2 notices are given and 2 notices are not responded by the SC, then National Assessment Center will ask the assessment unit to give one more opportunity to the assessor to say why the assessment should not be done in best judgment under 144. If that is also not required, the assessment will go under 140. So therefore, they are time-driven, they are process-driven, so there cannot be any endless adjournments. Department also has got a limited time of 9 months to complete the assessment process, and therefore, again, at the cost of repetition, I'm saying it's all the more important for us to be prepared with all the information and not to take adjournment, because adjournments are going to be costly. Now, opportunity. Now, I will just explain one more concept which has been brought in now, is that ILDP and SCR. ILDP means income loss determination proposal. This is also important for us to understand. I'll just spend a few minutes on this. So once all this process which I explained happened, assessment unit to verification unit, technical unit, all of them has happened, all that material will go to assessing officer. And what the assessing officer and assessment unit has to do is to prepare income loss determination proposal. This is a very good idea of what they come out. Is that it's nothing but a computation of income. So instead of very argumentative assessment order, which runs into pages and then we also give 10 pages reply and everything gets lost, they quote 10 cases, we quote another 10 cases, instead of all of them, they say ultimately the whole process of income tax assessment is income loss determination. So you have income loss determination proposal, which is nothing but a table, where they will start with the income as per written, and each item wise, what is to be added or what is to be deducted, And why they are not deducting, there will be a structured proposal. And these proposals are going to be very specific, not lengthy, and that will be prepared. And I think some of these proposals you would have already seen, I guess. Similar process is now implemented by the CPP also, the Bangalore CPC also is a very similar process, where you would have seen in the current year, after the financial 2020, you would have seen this. You will get exactly one table as per the return of income, as per the department, and the reasons. And here again, one point I want to make is, these are specific nuanced points, and therefore our response is also to be specific. You cannot give 10-page reply, but there will not be scope for you to give that kind of big reply and upload it, and it will not work. So we need to understand and give a specific reply. Second point is that these issues most of the time arise out of the inconsistency in the information we give. Apart from the positions and stands which we take, therefore I think most of the time what we find is that the audited financial statements, the disclosures what you've given in audited financial statements, the disclosures what you've given in the tax audit report, and the return of income. And the last one is the 26 areas and annual information system, which is available in the center. These 4 sources of information, there are inconsistencies which are picked up very easily by the tool, and any inconsistency will result in an ILDT, in disallowance. Even simple example like disallowance under section 37, okay, bonus provision for example. Tax auditor is reporting under section 36 as a bonus disallowance. You are doing a return of income under section 37. It is treated as a mismatch because the system cannot read it. It is an automated system. The system finds it as a mismatch and it is. And therefore, it's all the more important now that you must ensure that the financial statement, audit report, tax audit report, and these sources are not aligned. And particularly while filling up the return, you have to please take all sufficient care. It's not just putting under any column or any row, just at the last day, don't put it some figure and then push it. Ensure that every line in the return, again, the return form is also now electronically coded. Every line in the income tax return form is now aligned to a section or a subsection or subclass. To that level it has been aligned. So therefore, if you do this process correctly, you can avoid ILDT. Now ILDT will be prepared, and a show cause notice opportunity will go to the SSC. As I said, you need to respond specifically for that, and basing upon that, draft assessment order will be prepared. In the case of transfer pricing cases, the draft assessment order will be sent to them, and then they will go to DRT. That process will take, I will not take much time on that. In the case of non-TP cases, instead of a draft assessment order, it will become a final assessment order, and it will be issued to the SSC. And therefore, the whole process of assessment will happen in an automatic manner, in this manner. Now, the final point I want to mention before I go into reassessment is that in this whole process, there are 2 things which we need to really understand is the show cause notice and the personal payment. Show cause notice comes to us only once in the whole cycle. That is when ILDT is prepared. And you get a show cause notice. Along with ILDT, you will also get a right for personal hearing. Earlier, as I said, personal hearing was discretionary, the commissioner has to approve and all those things. That's all history now, that is not going to the previous time. Now, under the present scheme, 2022 scheme, when the ILDT is issued, then you can also ask for a personal hearing. Personal hearing, again, it does not mean physical hearing. Personal hearing means actually video hearing through video call. And therefore, at this stage, this is a critical stage for us. If for any reason we miss the earlier stages, giving the information properly, at the SCN stage, we need to ensure that we give a proper reply and also use the opportunity of personal hearing appropriately and do that. And again, at the cost of calculation, I will mention once again, the department is becoming more specific and nuanced in their notices. And again, today in the age of all short replies and short in the general social atmosphere also, we are seeing everything all abridged words and abridged letters. So therefore, gone are the days when we used to feel proud that I am doing a 10-page written reply, I have given 10 cases. Please avoid all of them. Understand the nuance there. Give a short, specific reply, case will be done. In fact, our experience has been that when you reply specific, they are very natural and very fair. After the show cause notice also additions are being done. But if you are vague, giving some reply, then they will drop it and then you go to litigating. So this whole process in place-plus assessment. Now, communications, I think I mentioned, all communications are through electronic mode only. Personal hearing I have mentioned. Recording of statements, also through things. Okay. So, one small last fringe point I have mentioned before this again shows the kind of care the department has taken care to ensure that no objections are raised to the scheme. That's why I wanted to mention this point. That when you are asking for a BC, the department is also assuming those cases or those assessees who may not have BC facilities. You could have a small trader in a small place who may not have BC facilities. Today, of course, it's really not there because every hamlet has got, everybody has got a smartphone and everybody can talk to them, but the department has provided for the council, the scheme has provided for the council. It says that it is a duty of the commissioner, principal commissioner, to provide adequate BC facilities to those assessors who do not have BC attended. Meaning, they will put up centers where they can come and utilize the BC facilities, or they have to roll out that scheme. But there is an obligation put upon the department principal commissioner to ensure that BC facilities are given. So therefore, summarizing, the whole scheme has been made very simple and automated. Everything is driven to technology and information, information. In fact, the word information is important, as we're going to see in the next reopening also, is that everything is now driven by information. And therefore, you need to look for the 4 areas of information and then coordinate them and be ready. And gone are the days when assessments used to be a big process. It will be very, very straightforward and simple, as long as you keep the house in order and do your homework properly before beginning the assessment process. And standard operating procedures have been given. Apart from all the scheme, SOPs have been formed, and I would request all of you to go through the SOPs. It's a detailed, almost 70-page SOP for each of the assessment units. Step by step, what they should do in different situations. You will find SOP in corporates. Now, the department has given SOPs to each of these units as to how they should respond. And next one, you will be more surprised. The Finance Act 2022 has amendments have been made. As I explained, the whole scheme has come, now new scheme has come. A lot of changes have been made, personal hearing, everything has been made. The entire software has been rolled out already. Entire software has been rolled so fast is the department's work. And they have put out formats for the assessing officer. 30 templates that says letters to the assessing, MOM of BC. If a BC call is done, after the BC call, what the officer should do, how we should record the minutes of that call. Templates have been there. So much standardization, so much guidance has happened in the department. So it shows the kind of forward-looking work they have done, and we need to be really up to speed to deal with that whole process. Then the assessment can be smooth effect. And therefore, I will leave this issue of faceless assessment. At least any specific issues, I will do that. As I said in the beginning and somewhere in the middle also, while this is all process which happens at their end and partly at our end, it's the knowledge of what happens at their end is more important for us to prepare ourselves and change. So that's the reason I said we need to understand and cannot be blind to what is happening there. Having said that, I think that is going to the issue of reassessment. I think I will take only 15 minutes and sharp was it 150 in the time given to me. This again a large topic is more important, but I will try and summarize the whole concept of reassessment. Now, reassessment, as we know, is a harsh measure because everybody expects quietness in the assessment. Once an assessment is done, if it is reopened, it's a period. Most of it happens after a period of time. Now, there are the whole reassessment scheme has been amended in Finance Act 2021. New scheme of reassessments have been brought in. I will call the old thing as old regime and the new regime. The new regime has come in 2021. Here again, as I said, 2021, 2022, basing upon the practical experience, the government has made again foolproof amendments in Finance Act 2022, and therefore the Finance Act 2022 gives the updated, latest version of the new regime. This is point number 1. Now, I just give a small comparison between old regime and new regime instead of running through my slides, so that I can finish in 15 minutes. But without missing any of the points, I'll try to do that. The old regime, what was happening was, what were the key factors in the old regime to do? 3 things you have to understand. what was the basis on which reassessments can be done, what is the process of reassessment, and what are the time limits. These are the three things which define a reassessment. The first one, what are the basis on which reassessment can be done under the earlier section 147 is that the assessing officer has a reason to believe that income has escaped assessment. Reason to believe. If the assessing officer believes that you have a bank account in Hong Kong, Jawahar has a bank account in Hong Kong, it will open the system. No questions asked. What happens later, whether the bank account in Hong Kong is there, is not there, is a $1 account, that's all different. Assessments can be reviewed. This is dangerous because the principle of reassessment, which has been upheld by the Supreme Court, is that the assessing officer needs one reason to be open, however small it may be. But once it is reopened, everything is open, it's at large. Then he can attack several issues. He can revisit issues. He can change his opinion and again start attacking issues. Though courts have said change of opinion is not permissible, but they used to do that. So therefore, for a silly, flimsy reason that you are not disclosed, I gave the bank account of Hong Kong as an example, but they used to do very silly reason. You had a bank account with Andhra Bank, which you are not disclosed. Therefore, I reason to believe that income is escaped. That Andhra Bank account could be a non-operating account, or it could be a personal kitty account, whatever. So reason to believe, which is highly discretionary, very, very arbitrary, and there are no, and courts could not put any curtain on that because court says it is a discretion given to the assessing officer, we cannot interfere in a relevant discretion. So this is point number one, reason to believe. Second is the process. What is the process? The process is that it's like a gorilla. First you reopen, then you do the assessment. So therefore, you have the notice is given under 148. The assessing officer has got reason to believe. You give a notice. You are forced to file a written of income because once a notice is given, you are forced to file a written of income. You cannot say I will not file a written of income. So even if you feel that there is no income escaping assessment, the earlier income is same, still you have to file a written of income. The whole assessment process has to happen. Only saving grace was that Supreme Court in GK and Shala case, a few years back, I think most of you know, put in some semblance of natural justice by saying that after the reassessments are open, the assessing officer should give the reasons for that, because before reopening, you will record the reasons for reopening. That has to be given to the assessor. The assessor can make then a preliminary objection. The officer should dispose of the objection and proceed forward. Again, this is a judicial made process, and what used to happen was that you file a written, you ask for the reasons, they will give some vague reasons. Like I said, they will give a vague reason saying that your name is appearing in the investigation report of Calcutta in petty cases. That's the reason they will give. What will you do with that? What kind of response you will do? You will give a response, you will say your response is rejected and go forward. So therefore, though Supreme Court interpreted and tried to put in some kind of balance, it was not really working. Third is a time limit. The time limit was very, very harsh. The time limit for reopening generally 6 years from the end of the assessment period. But in those cases where foreign assets are involved or other cases, it can be reopened up to 16 years also. This was a very long period where the assessment can be done. So this was broadly the system which was working here, without going with the other nitty-gritties. Now, as part of the overall system of simplifying income tax and then bringing transparent assessment, transparent processes, I think I was definitely saying the department the government has come in here, well thought out new regime. Totally, the scheme has been totally changed. They're taking care of all pain points and then ensure that system is fair and transparent. So I'll just skip this recap of all regime slides and come to the new regime. I'll just explain the new regime and then go to some of the specific bullets so that we can do it in 10 minutes. The new regime is very, very fair and transparent because, again, there are three broad concepts on which the new regime is based upon. The first concept is information. Second concept is the process. Third concept is the timing. Again, these three have been given the contours of the reassessment, and the whole reassessment has become very fair and transparent. Let us understand each of the elements. First is information. Information. Unlike the earlier case of a reason to believe, Now the whole emphasis is shifted to information, which is fair. If there is an information, your case will be reopened. If there is no information, it cannot be done. I think it's a very fair approach, nobody can question. So what is information becomes important. In the earlier case, we used to believe an income escaping assessment was not defined. Even the term income escaping assessment, which is the basis for reopening, was not defined. It was all left to everybody's discretion. Now, the whole concept of information giving, which suggests that income chargeable to income escape assessment is defined. Information with the assessing officer, the AO should have information which suggests that income chargeable tax escape assessment. Now, there are 5 particular situations which have been identified which are falling in this definition. So therefore, it means it has to fall within any of these 5 situations. Not only it will be liable for reopening, otherwise it cannot be reopened. Now, what are those 5 situations? Any information in the case of the assessee for the 11th year in accordance with the risk management strategy formulated by the board from the country. As I said, the whole emphasis of the department today is towards risk management. Risk management means, I explained already, you might repeat it. They have a policy on how to tackle tax evasion, industry-wise, different areas, how to tackle tax evasion, and how to identify potential tax evasion cases. So the whole risk management has been profiled by the department, and so basing upon the risk assessment and basing upon the automated tools, if an information is identified, then it becomes a case for you. So it is not the individual officer sitting in Hyderabad or anywhere saying that I have reason to believe. The whole process of this information is done by the board. Again, by a special tool, not again any individual. So therefore, it is automated, and they collect information from various sources. As we know, information is being filed with the government from various sources. GST gives information, other department gives information, I get customs information comes to them, our own quarterly information reports, what we are getting. The whole host of data is going to the Insight portal. Insight portal will do data analytics, and it will compare with the return file. It will compare with the income shown in the return file, it will compare with the transaction shown in the return file. If there is any mismatch, it will throw in there. It will throw specific information. It is not that generally, I believe you have a bank account. It will throw specific information, so-and-so transaction has not been shown. There is a sale deed, you have done, sale deed is registered, that information goes to the department, that is not reflected in your return. It will show so-and-so sale deed. So therefore, information driven, very, very good concept and very fair concept. And therefore, absolutely no discussion, it's all driven. I put the strike through in plan. I'll come back to that after finishing the file. Now, second is any audit objection to the effect that the assessment in the case of assessee for the assessment year has not been made in accordance with provisions of Act. Traditionally, audit objections, based on audit objections, we used to reopen assessment, and there was a long battle, Indian Express Society news case of Supreme Court, whether audit can be the basis, all those, they have to put an end to all this controversy. Now, since the whole focus is on really catching any income which has escaped assessment. The section 147 itself now talks about income escaping assessment can be taxed. If it is escaped, it is escaped, it can be taxed. So there can be no other definition for that. Therefore, they said audit information also is a source of information. If audit gives an information that a particular addition has escaped, it will also become a case, which is again very specific information. Third is information received under agreement under 90 and 90. This you must be knowing under double taxation agreement. Now we are collecting information from other countries, and there's internationally now there is large cooperation. So any information coming about your bank accounts or any other information will be used. Information made available to the assessing officer under scheme notified on 135. This is also very important for the It's a very new development. Section 135A has come in 2021. It has been operationalized now. 135A is that an appropriate officer in an electronic manner can collect information. Meaning he can give notices to you, he can collect information instead of a physical survey. They can collect information from any assessee on any transaction carried out by any financial transaction carried out by him. So there is a special team task under 135A for collecting information. So apart from the regular flow of information, it's a flow from the department to the individual assessees. So they can ask you, they can send a question to you saying that you have done a foreign tour, has it been disclosed? So simple mail will come into your e-portal, You've done a foreign tour, have you disclosed it? If so, please give me the reference. If you don't respond or you respond inappropriately, then this section will get attracted. So it's again specific information. Any information which requires action consequences or a tribunal outcome. Again, this is again was a litigated area here that tribunal order how to deal with it. They said information is information. It can come from any source. If a tribunal or a high court says that a particular issue needs to be revisited, then that will become the best solution. So therefore, these are 5 specific cases which have been identified basing upon which only reopening can be done. There is no other area under which reopening can be done. I think this puts the whole system into a very fair manner, I would say. Now, just 1 minute on the word flag. I was quoted because the word flag is now deleted from 2022. It was there in 2021. Finance Act 2022 deleted that word, only the word flag. You read the section with the flag and without, there is a lot of difference. Any information flagged in the case of the assessee means that there should be not only information, but some officers should flag it. Earlier system was that CBDT used to post it to the individual assessing officer or assessment units. They push it to the assessing officer, that's what they were called as flag. None only action can be taken. Now they have realized that it is not necessary that it has to be pushed to an individual officer. Once there is an information, that's information. Information may be at any place within the department. It can be with NFC, it can be with the individual officer, it can be with wing, it can be with the department, or it can be just a data filed by, let's say GST has filed some data. It's not even opened by the department, but still is information. So therefore they say flag does not, is actually restricting information to be all pervasive. So they deleted the word flag from 2022. And therefore, no, any information is information. And this again shows the alertness of the department and the carefulness with which the department is working. And they're looking at each and every word, you can understand what it is. Now, apart from this, there are also cases called deemed escapement of income. There are 4 cases where the income is deemed to escape. Is that such cases, I will not take much time, such cases are cases where any gold, bullion, etc. is found, survey cases, or cases related to such. When A is such, but in the case of such in A, they found that some gold, bullion, etc. are books of accounts related to B, which we call related cases where used to be under 150 C and all. Those cases are also now covered. So these 4 cases are called deemed information cases. So 5 cases which are defined and 4 deemed income cases. These are the only cases in which assessment can be reopened. Now, second is the, I will explain the process and then go to the, I will explain the process in, can I take another 5 minutes? I will explain the process. The second element is the process and third element is the time limit. Time limits we need to spend little time. And process I will explain quickly. Now, the biggest change which has been made in the process is that earlier, as I said, after reopening, you give a notice and you just give a reasons recorded credit. Because by then it's all fait accompli, it's only a process. The real natural justice principle will be solved when before he reopens, an opportunity is given to us. That's the real thing. And that is what has been done under 148A. A new section 148A has been brought in, which has put 4 steps in ABCD. What are the steps? Once the officer has gotten information, he said the trigger is information. He has gotten information. Once he's gotten information, he cannot go start giving notices. He has to first conduct an inquiry. Please see A. First step what he has to do is conduct an inquiry, if required with the prior approval of specified authority, with respect to the information he suggests that income chargeable to income has escaped assessment. So it's not just he's got information, he should also conduct inquiry, validate that information, and come to a conclusion that yes, there is a case for reopening. So there's a process conducting of inquiry which is to be done better. Second, opportunity to the assessee. Provide an opportunity of being there to the assessee by serving upon him a notice to show within the time limit, etc. On the basis of why notice should not be issued on the basis of information which suggests that income chargeable to income tax has escaped assessment. So, after conducting inquiry, the outcome of the inquiry is to put a show cause notice to the assessee saying why for this particular information ahead your assessment should not be required. Consider the reply, point C. Point D is decide on the basis of material available on record, including the reply of the assessee, whether or not it's a fit case to issue notice under section 8%. So it's not only the reply, you should consider all material, meaning that there will be some material which is not to the assessee, but known to the department. So therefore, there is an onus on the assessing officer to be fair and to pass an order in what we call a non-adversarial manner to ensure that he should apply his money and pass an order. Now, after passing this order only, then you can go and reopen the assessment and give the notice. So what the benefit for the assessor is a very important right, because first is made to conduct an inquiry. Second, we are given an opportunity. We can get a reply. We can try to convince the officer himself. And if the officer is not convinced in the order under D, he still treats you as a fit case for reopening. You have the right of going for writ petition and ensuring that the order passed under 148A(d) is not correct. And you know the courts are very fast in giving writ relief. And therefore, you are avoiding the whole unnecessary process of reopening very effectively. It's not that you are made into the process and then you have a remedy. As we call in law, the very famous phrase in law which says that process is the punishment in India. So at the end of the process, if you are acquitted, what is the benefit of that after 10 years of process? So therefore, the process is avoided, the punishment is avoided here. And this is the second important pillar of the new regime, that the principle of natural justice has been very beautifully reinforced in the whole system of assessment. So last, time limit. Time limit was got many implications, but first let's understand the bare provisions of time limit. Now under the new provisions of section 149, the reopening, earlier as I said, you had a limit of 6 years and 16 years and all. Now the whole reopening falls into 2 buckets. Generally, the reopening can be done only up to 3 years from the end of the assessment. So it has been reduced to 3 years in all general cases, which is a very huge relief because 6 years gets reduced to 3 years. Now, second bucket is in 3 cases, in 3 situations, up to 10 years it can be reopened. That is clause B. What are the 3 cases? If there is an asset, the officer has found in the assessor's possession books of account or other document which reveal that income chargeable to tax represented by an asset, expenditure in respect of a transaction or in relation to an event, or entries in the books of accounts, which has escaped assessment amounting to more than 50 lakhs. So if there is an asset, if there is a property which is not been disclosed, or you have incurred an expenditure, or in relation to an event means that there is a marriage which has happened and on which huge amount has been spent, not disclosed, which comes to notice, or there are entries in the books of accounts. Very famous case of all book entries, credit entries, what are inflated entries, inflated sales, and inflated expense. So these 3 situations, combined with the fact that this is more than 50 lakhs, then assessment can be reopened. Assessment can be reopened after 10 years. So there are 2 buckets, 3 years and 10 years. In this case also, there's another provision which says that the aggregate of this transaction in more than 1 year, if it exceeds 50 lakhs also, it's not insufficient. But instead of 1 year, if the asset is found in, let us say there is a construction which is going on, and year 1 to 3, construction is going on, year 1 to 3, year 1 10 lakhs, 20 lakhs and 20 lakhs. Aggregate 50 lakhs for that particular asset, still also it can be reopened and all the 3 years can be reopened. And only years in which the information is found can be reopened. Even within 3 years, within 10 years, it is not that under the earlier system, if there is one small reason, whole block can be reopened. But now it is not like that. It's information driven, information driven, information driven. If out of 10 years, if this asset is found, let us say in 17, 18, 18, 19, 14, 15, only those years can be reopened. It's not that all entire block of 10 years can be reopened. So it is a new provision. Now, interpretations or implications of the time limit, or 2, 3 implications, I will say and then leave it at that. This first implication, what we need to know is grandfathering provisions, which are very important. Grandfathering provision means that under the earlier law, we said 6 years is the limitation. Now it has been made to 10 years. Under the earlier law, anything more than 1 lakh can be reopened up to 6 years. Now we are having 10 years. So this block of period 4, 5, 6 years is an extra now which has been enforced, though basing upon information. But government wanted to give a grandfathering and exit provisions for those cases. So therefore they say, as on 31st March 2021, if the 6-year time limit has ended, then that cannot be reopened in subsequent. Which means that the 10-year period, in simple language what it means is the 10-year period will be 6-year up to 30/2021. Only for the future assessments, the future financial years, it will become 10 years. Put it another way, as of 2021, only assessments up to 14-15 assessment year could have been reopened. So now assessment before that cannot be reopened. 13-14 cannot be reopened. 14-15 also cannot be reopened. Now only 15-16 can be reopened. So therefore, the whole period as for the past transactions are concerned, which is very, very major relief according to me, because it gets the benefit of both the old law and good law. The substantive law is a new law. It is based on information, etc., etc. But time limitation is one law. So therefore, you have the best of the both worlds, and government is conscious that many cases may go under this. But what they found is in reassessments, many of the reassessments are chasing the wild goose kind of situation. So therefore, they say, let us focus on risk, let us catch the real evasion. Again, this does not mean it should be only some 100 crores outside India. They said the policy is against tax evasion. The policy is against any kind of evasion. So whether it is a 1 lakh evasion or 100 lakhs evasion, doesn't matter. If it's an evasion, it will be deducted by the system and it will be evasion. And therefore, more than 50 lakhs cases will be open like this. And another interpretation of this time limit is that, again coming back to this, the expenditure and entries in the books of accounts, these two clauses, clause 2 and clause 3, have been added only by Finance Act 2022. It was not that earlier. It was earlier only asset of these two have been added. The implication is that from 1/4/2022, all three categories can be added. This again is a alert action of the department in doing that. I think I've given all this implication in this slide. If there are any specific questions, I will deal with them. One more last exception also we need to notice is that, as I said in the earlier case, in the earlier regime, foreign assets up to 16 years was the period. Now there is no mention about the foreign assets. The only three criteria is any asset, expenditure, entries in the books. So therefore, even in the case of foreign assets, this still reopening can be done. It is not necessary there has to be separating, but limitation gets to 10 years. Limitation period gets to 10 years, and again because of the grandfathering, it will be up to 10 years. So in the case of foreign assets, anything from 2010 onwards, 2012 onwards can be brought under the new regime. Anything before 2012 will go away. So therefore, that's the interpretation of this. Now, this is in a nutshell. I think just to repeat, we have moved from reason to belief to information. Whole process of fair process has been put in place. One point I did not mention is because of lack of time is under 148E, at 3 stages, approval of the higher authorities report. Higher authority means principal commissioner or DG as the case may be. So highest level of approval. Before conducting inquiry, approval is required. Before giving a show cause notice, approval is required. And before issuing notice under 148, it's required. 3 stages. Specific approval of the prayer approval of the 380 report, which is a very tight system of checks and balances, and therefore so much of right is there. There is a controversy of reopening. I will leave it at that. If there are any specific questions, I will deal with that. Now, only one part of the question is that the government is really moving in a direction of simplifying tax laws, bringing in sufficient literature, gathering information, doing analytics, using technology, non-discretionary, all kinds of efficient reforms are definitely being made. The fruits of that we are seeing, in spite of pandemic, the tax collections have increased. I think there can be no more proof for the efforts made by the government than that tax collections are going up. And as tax professionals, I think the only piece of advice I would give is that we should change our mindset to being litigating and running off litigation. We should move towards compliance. I think that would give more work for us also, because it's not that at the end of the year the client comes to you, you file a return, and then when the notice comes, you reply to that. You have a compliance job, understand the law, understand the positions, understand the department's point of view, and then educate the client, be with the client throughout the year, ensure that compliance takes place on a concurrent basis, on a daily basis, and while before filing the return of income, before signing the tax audit report, ensure that you have a tax dossier with all the information, so the journey will be more enhancing for us also. And therefore, our approach should be more compliance oriented than litigation oriented. And then the question of discretion is now not there. What is going to matter is only the subject. And therefore, gone are the days where relationship, etc., was there. No, those etceteras are not there. Only your information, knowledge, and compliance are the keywords. Thank you for your patient hearing. And if there are any questions, if there is a time, I will thank you very much.